Our next guest is using this reporting season to make some changes in his portfolio. Joining me now, right here, Post 9, Kevin Simpson of Capital Wealth Planning. Good to see you again. We'll talk about the market more broadly in a minute, but I want to get to the moves first. You bought Freeport-McMoRan. That's sort of your headliner new buy.
Yeah, pretty exciting, huh?
Well, you must be bullish in the market now, or certainly bullish on the economy, because if you weren't, why would you buy Freeport?
Yeah, I think there's going to be a rebound in copper. You know, we want to look for things when they're down. They posted earnings, which we thought were pretty good this week, Scott, and it sold off 5%. So we're looking at a company that's cleaning up its balance sheet. It's definitely going to be a beneficiary if there are some stimulus in China or if it does reopen at some point. It's a dividend a little bit lower than I typically look for, sub 1%. But over the past 3 years, they've been increasing that at about a 44% clip. 9 times EBITDA. I think there's an opportunity there to take a position in a little bit of a commodity play, more copper than gold.
Are you still as cautious, if not just negative on the market as you've been?
I'm always cautious, no matter what happens.
I know you're cautious, but you've been negative. You've been tilted negative on the market.
Yeah, I think.
Does this say anything, this buy, about your opinion sort of changing?
Yeah, I think as we get to the end of the Fed heightening cycle, we have to take the reality that the consumer has been so strong into account and expect that we're not going to see those October lows retested. So I don't know that the market has a whole lot to go in terms of its broader appeal. But even if we do have that catch-up trade, then stocks like Freeport and some of the others that we've been piling into could be beneficiaries because they haven't done anything.
Is that why you bought more Coca-Cola?
Yeah, you know, again, like the anti-tech trade, we were talking about it a month and a half ago. The last time they had earnings, the stock sold off 10%. And we thought with Pepsi's good earnings last week that we'd see a follow-through with Coca-Cola, and we did. They beat on top line, bottom line. They increased sales for the year in terms of their estimates. And what's great about Coca-Cola is not only did they raise their margins, they also raised sales. Checks off all the boxes.
So you wrote calls on we're looking at the screen. You wrote calls on Microsoft and UPS. To hedge positions that you have in both of those stocks?
Yeah, you know, there's been a lack of volatility, almost it's an absence of volatility in the broader markets, but UPS heading into what became a good outcome. With
crisis averted,
yeah,
right?
Exactly. But vol was picking up before then, so we're able to get really good premiums. Same with Microsoft and Apple. You've got opportunities within tech where you've got higher premiums heading into earnings, and in both cases, they turned out to be really good option trades.
Microsoft is interesting, isn't it? I mean, it's so much representative of the sort of psyche of where the market is. You know, earnings, I'm not going to suggest that they were disappointing, but, you know, the stock obviously didn't have a great reaction to it, and yet the stock's only down 1.4% on the week. And as you just saw on the board there, as all of our viewers are looking at it now, it's up 2.5% on the day. So there's still this idea of buying these names on any sort of dip.
Yeah, and I think we're going to continue to see that because people want to be in them. I continue to trim them. I continue to write calls on them, but I'm sure as heck not selling out of them. I think the multiples are a little bit stretched, but the opportunity for the catch-up trade to me is real. And even if the market stays flat, or even it went down a little bit, and those names that maybe were ahead of their skis came down, and the rest of the market goes up, certainly that would be good for me and my style box because there's a lot of value names that haven't had a pulse in the past 6, 7, 8 months.
Give me some more details on UPS, if you will. We just briefly mentioned it in passing. Obviously, the strike, you know, we're worried about it, and it's not going to take place because of that agreement that we reached. The stock's up 7% in a month.
It was a great job by UPS. It was an awesome job by the Teamsters, and it's great for the economy and for for all of us. The stock has increased its dividend by 16% on average for the past 5 years. That's what I'm looking for. I want companies that can increase their dividends because their share price will be reflective of that earnings growth. So if they've got earnings growth, dividend growth, it's a hedge against inflation, and ultimately the stock price will go up over time.